Welcome back. After another week, it's time to check back in with the portfolio and see how it's tracking through these tough times of the market's highs and lows. I also want to go over this article released by CNBC called Inflation Surges 7.5% on an annual basis, even more than expected and the highest since 1982, and speak on inflation and how it could be affecting how I am investing in the future. The portfolio currently sits at $9,803 down from last week as the bipolar markets struggle to make up their mind. Taking a quick look at the portfolio, it seems the tech stocks were hit and have fallen a bit over the last day. The QQQ is down over 3% in the last day, and that gives a summary of how the overall tech stocks are doing. The S&P is down 1.5%, and overall it was just a red close to the week. I will continue to put money into this portfolio. I slowed down recently as I needed some extra money for personal use, but I will be getting right back into the consistent investing, especially now when stuff is discounted. But now to get into the main part of the video, and that is to speak on inflation and the numbers that have been reported. CNBC writer Jeff Cox released this article a few days ago speaking about the consumer price index rise, core inflation, and jobless claims. I thought it was interesting, so let's get into it. Consumer prices surged more than expected over the last 12 months, indicating a worsening outlook for inflation and cementing a likelihood of sustainable interest rate hikes this year. The Consumer Price Index for January, which measures the costs of dozens of everyday consumer goods, rose 7.5% compared to a year ago. The Labor Department reported this on Thursday. That compared with the Dow Jones estimate of 7.2% for the closely watched inflation gauge. It was the highest reading since February 1982. Stripping out volatile gas and grocery costs, the CPI increased 6% compared to the estimated 5.9%. Core inflation rose at the fastest level since August 1982. The monthly CPI rates also came in hotter than expected, with headlines and core CPI both rising 0.6% compared to the estimates of a 0.4% increase by both measures. Stock market futures declined following the report, with rate-sensitive tech stocks hit especially hard. Government bond yields sharply rose, with the benchmark of the 10-year Treasury touching 2%, its highest since August 2019. Markets also got more aggressive in pricing rates hikes ahead. The chances of a 0.5% point Fed rate increase in March rose to 44.3% following the data release, compared to the 25% just before. According to the CME data, chances of a sixth quarter percentage point hike this year rose to about 63%, compared to the 53% before the release. With other surprise jumps in inflation, in January, markets continue to be concerned about an aggressive Fed, said Barry Gilbert, assets allocation strategist at the LPL Financial. Whilst things might be getting better from here, market anxiety about potential Fed over-tightening won't go away until there are clear signs that inflation is coming under control. Food and shelter costs also sharply rose. The inflation numbers come across as crossroads for the US economy, with 2021's rapid growth pace expected to slow this year as the fiscal and monetary stimulus fades. Growth is still expected to be above trend, though sharper rates increase from an inflation-fighting Fed could prove troublesome. On a percentage basis, fuel oil rose the most in January, surging 9.5% as part of a 46.5% year-over-year increase. Energy costs were up 0.9% for the month and 27% on the year. Vehicle costs, which have been one of the biggest inflation contributors since the beginning surge, higher in spring 2021, were flat for new models and up 1.5% for used cars and trucks in January. The two categories have posted respective increases of 12.2% and 40.5% over the last 12 months. Shelter costs, which make up about 1/3 of the total CPI number, increased 0.3% on the month, which is the smallest gain since August 2021 and slightly below December rise. Still, the category is up 4.4% over the past year and could keep inflation readings elevated in the future. Food costs jumped 0.9% for the month and are up 7% over the past year as well. The combination of higher food and housing prices underlines our view of the rapid, clinical acceleration in inflation that is underway, and with the labour market conditions exceptionally tight, it is unlikely to abate anytime soon, wrote Andrew Hunter, senior US economist at Capital Economics. While we expect more favourable base effects and partial easing of supply shortages to push core inflation lower this year, this suggests it will remain well above the Fed's target for some time, he added. The burst in inflation has muted the sizable earnings growth workers have seen. Real average hourly earnings rose just 0.1% for the month, as the 0.7% monthly gain in wages was almost completely wiped out by the 0.6% inflation gain. A separate report Thursday showed that weekly jobless claims totaled 223,000 for the week, ending in February the 5th, a decline of 16,000 for the previous week and below the 230,000 estimated. It was the lowest total since January the 1st. Continuing claims, which run behind, held at 1.62 million. The total of those receiving benefits under all programs rose slightly to about 2.1 million, according to the Labour Department data through January 2020. Overall, this doesn't sound like good news, and it mostly isn't, but that's just what we have to live with now, as the world tries to get back on track to pre-pandemic lifestyles. To get back to that way, stimulus was printed in abundance, and now we have to see the consequences. For investors, I believe they are trying times, and with the great bull run the stock market has been on over the last decade, long-term investors should not worry, as they should have known these things were going to come. It cannot always be green. But I know myself, I will continue to invest reasonable amounts that I feel comfortable in and safe knowing I won't need that money anytime soon. And hopefully will use these trying times to increase my position in greater companies for the long run. That is it for this video. Hopefully, this look into new inflation numbers has helped you understand what's going on. Tune in every week for a full transparent look at my portfolio through the ups and downs of the market, as I hope to grow my wealth with long-term investing.